Hey everybody, today we're going to be doing a little trade breakdown on a short and a long that I took within the same session. I was in drawdown protocol here. I was already down on the day, so I was looking to make those losses back plus more, and I'll be going through that here. So without further ado, let's go ahead and start the recording. So you can see that I went short on the inversion of this fair value gap right here, and now we're trading into this lower BISI. Saw I lowered the stop, and I'm looking at the midpoint of how we react here. You can see it at the high of this candle, and I'm looking at the left chart right here, which is a 1 minute chart. I'm looking to add another position right here because I really think we're going to dump, but we end up not being able to go back and hit me in. So by the time we hit this lower fair value gap right here, I take off the limit order. And then since we swept this low,
Order filled.
you see me taking a partial right there. So now I just have one contract on, and my last contract is held for the lows right here. This fair value gap that we're trading up into right now is really important. And again, I'm using the framework of a market maker sell model during the lunch macro reversal. Okay, so with a lunch macro, if we've only been trading one-sided for the majority of the day, I'm looking for that lunch macro anywhere from it can start as early as 10:30 and go all the way till 1:30, but within that time, looking for a run on stops on those who are profitable. Now, this fair value gap that we're trading up into, this BISI, if we look on the left-hand chart right here, this is really important to me, and we need to hold this in order to go and show a continuation lower. That's why I'm happy with my stop loss at break even right here at the high of this SIBI. Now I'll go over exactly why I'm picking these fair value gaps right here because there is some context behind it that I'll show you in just a second. But I need this, more specifically, the midpoint to hold. So that's what I'm looking at with my gaps is the midpoint specifically. And what I'm going to write here is I'm looking for speed because as this candle's closing, look how we close right at the midpoint right here. So I'm looking for speed lower now. I need price to prove to me that it's going to go lower. And I'm looking on the 15-second chart, which is the one in the middle, and the 5-second chart, which is the one on the right, at gaps to be left open after displacement legs right here. Okay, so once I see this candle close above and get above this, I'm thinking, okay, my stop is going to get hit, which is completely okay. And you might think, well, we just closed within this 1 minute SIBI right here, right? It can still go lower. I'm not thinking that. That's why I typed didn't get it, likely break even hit right here. And it's because we closed above this 1 minute BISI. And I'm expecting it to act as reclaimed now. And you can see that we go right down to the midpoint of it and we hold it. And then we start to see that movement away. So now I'm thinking, okay, I'm likely wrong. I took my profit. I cut down my initial loss by pretty much half. Then we're going to see my break even get hit right here. And at this point, I'm starting to see price a little bit differently. You can see me mark out this order block
Order
right here,
filled.
and you can see that my break even was hit right there. So you're going to see why I marked this out and why this area was so important to me here. So I'm going to go ahead, I'm going to pause the video, and we're going to head over to a chart really quickly just to give more context on this. So I'm currently using chart replay up until the point exactly where we are on the exact candle. And this is what I was looking at, okay? So what I'm doing and how I choose my fair value gaps in my order blocks is I'm anchoring them to gradient levels. And this is the most important aspect within my trading and how I'm picking the right PD arrays. Now, typically what I'm using is the gradient levels on new day opening gaps, new week opening gaps, opening range gaps, and you know, daily wicks and things along that nature. We're at a certain spot in price on the daily chart where we don't really have anything near term like that. Like there's no near term opening range gaps. All we have is the first 30 minutes dealing range and the first hour dealing range. And those can be measured and used as gradient levels as well. So what I did was I measured from the 9:30 opening price up until 10:30 a.m. That's your first hour of your real or your regular trading hours. That's your first hour dealing range right there. And you can also do the same with your first 30 minutes, which I really like to do as well. So we'll go ahead and do that. And we'll make that one a little bit thicker. So the purple is the first hour, the black and the orange is the first 30 minutes, your opening range right there, okay? Now, I'm using these levels and I'm looking for my gaps in my order blocks to be anchored to these, which means I'm looking for them to overlay them. And the ones that do are the ones that I am looking at and the ones that need to align with my bias and my narrative and my targets. And it's how I'm entering on these trades here. So you can already see where I entered on the inversion fair value gap up here. What is it overlaying top of? The first hour dealing range high right here at 10:30 a.m. Okay, so that is why I liked that as an inversion fair value gap, but I also needed the context of a lunch macro reversal, which is happening right around 10:50, 11 a.m., which is that macro time, right? And we have some equal lows right here that I was targeting. You see I have this fair value gap marked as inversion because what's it overlaying? The gradient level, right? And then where does price go down to? Well, we sweep this low, and where was the low made? At the first 30 minutes opening range high, right here. So this was a good low to target, and that's why I took a partial right there, is because not only is it reaching this gap, but it's also hitting the opening range high right here. Okay, so that's where the low was made. Once we start to move higher, I need the lower half of this to hold. Yes, we have a BISI right here, or excuse me, we have a SIBI right here, but for price to show me that it has really bearish characteristics, I would expect this to be a breakaway gap because the upper half, breakaway gap meaning I don't want to see it get filled, because if we're using this as inversion fair value gap, this one right here, what do we not want to see with our gaps? We don't want to see the upper half of them fill or get closed above. The wicks can do the damage, but the bodies need to stay below. So if the body is going to stay below the half right here, that means it can't get up into the upper half of this. So that is why I don't want to see this fill. Once I see this candle right here, as I mentioned before, close above this gap, which is important because it's overlaying the gradient level and I'm anticipating an overall market maker sell model. Now I'm thinking we have a couple things that have happened. We're overall bullish on the daily time frame. We've swept this minor low. We've used this BISI right here as support, and we hit the opening range high with precision, and now we're seeing bullish characteristics in price. Why am I using this as an order block right here? We'll go over that here in just a second because you're going to see me immediately switch my bias and place a limit order right here for a buy on this order block. Because now I'm thinking, okay, my short bias was wrong and now I can go long, but I don't want to be risking more than what I'm already in drawdown, right? Because I'm already in drawdown for the day since I took a loss and then I took a win right there that you guys just saw with a partial, but I can't over leverage or try and just have my mind think about, okay, I need to make back what I'm down on the day currently. No, just think about it trade by
Order
trade,
filled.
right? So I'm risking very, very little on this trade, just about 20 bucks per account, which is very small. Looking back, I could have done more, could have done a couple more contracts, but you're going to see I'm able to actually get some partials, or excuse me, not partials. I'm able to actually pyramid, and I'll go over why I was able to pyramid right here. So the next thing I'm looking at is using like the mountain climber analogy. I'm looking for footholds for price to be able to use to continue going higher, and that's going to be this 1 minute BISI on the left hand chart right here, which we're currently going into. So I love the displacement above it that allows me to move my stop up below that displacement leg, and I want to see us close above just like that, because now that we go in,
Order filled.
you're going to see me add right there. So now I have two contracts, and the risk is still extremely low. My reward is high. It's a very, very good risk to reward ratio that would end up making me back my loss on the day plus plenty more. We take out this internal high where I'm able to take a partial and then just
Order filled.
let the rest run. So now back to this chart. Why am I using this order block? Because one, using this as a reclaimed fair value gap, so we can make this blue now. It was used before to go higher and take out this high, traded back below it. We have buy stops engaged up here, or excuse me, we have breakout buyers engaged up here. Their stops are going to be somewhere down here. Run those stops. Breakout sellers are engaged now. Take out stops right here, and now the real move is allowed to perform and align with higher time frame order flow. So once I recognize that this down close candle, it's holding the midpoint of this reclaimed BISI right here. What else did we do? We inversed this, right? So remember I said I did not want to see the upper half of it fill. Not only did it fill, but we closed above it. So now I can use that as inversion. And why do I like that one? Because it's overlapping the first hour dealing range gradient right here. You can use gradients for all the things that I mentioned before, right? Opening range gaps, daily fair value gaps, daily wicks, new week, new day opening gaps. I use it for all of them. This order block is overlapping several different levels right here. I placed my limit and now we see it moving higher. Why did I want to see this act as a reclaimed? Because again, it's overlapping that first hour dealing range high, close above it. This high is near term, right? We go down, hit that, hold the midpoint, don't even explore below. So that is an extremely bullish signature to me. All right, now back to the video right here. Now I'm looking for this last up close candle to act as a breaker because we have a high. This candle took out a previous swing high that you can't see on the chart. And again, I keep referencing the left chart right here. That's where my eyes are, the 1 minute chart. I'm looking for this to hold because we have a high, a low, and now we have a higher high. And this last up close candle took out a previous swing high. I have this marked and I'm comfortable with my stop loss at break even because it's below the breaker and it's below this BISI that's overlapping the breaker midpoint. So again, what do we like to see with our PD arrays? If we're bullish, we don't want to see the lower half of them get closed below on a body basis. And that's exactly what we're doing right here is we're holding that midpoint. We tap it and we go. Would I want to see this BISI filled? No, because it's below the midpoint of the breaker. And I'm liking the response I'm seeing from the high of that breaker right there. I don't have it marked out, but this down close candle, that is an order block. Moving my stop up just a little bit. Really, we're just letting price run now, right to our targets. I'm able to kind of just sit back here, kind of stopped paying attention to the chart for a little bit because you just have the luxury of doing that whenever you have your runner on and you feel confident with price and the signatures that you're seeing. What am I doing with this current BISI that we're trading in right now? I want to look at midpoint. So you're going to see me throw on that right there. What did we do? We go right down to it, hit that midpoint. Is that a bullish signature away from it? Absolutely, right? Now my targets up here, since we were kind of trading in no man's land up, really high, really strong moves on the daily chart on all time frames. We don't really have any significant liquidity pools, so this is actually just targeting a 4-hour SIBI, a 4-hour fair value gap. And just watching price. Don't have to worry about anything right here because of all the bullish signatures I'm seeing. I am not choking my stop up too tight, and the stop or the take profit is hit. My losses were made back for the day plus more using very, very minimal risk, because whenever I am in a little bit of drawdown for the day, you don't want to go back in there and risk more on the position to try and make it all back, right? Using very good risk management, very accurate entries, very accurate stop loss placements. You can risk just a little bit and you can make a whole lot of it. Okay, so that's going to be it for this trade breakdown right here. I hope you guys found this helpful, and we'll talk again soon.